Hey guys, it's Mark Pyers, home-based business tax coach and wealth coach, the CEO and founder, along with my beautiful wife and business partner, Mrs. Lavita Pyers, of an incredible tax educational platform called the Academy of Financial Education that I've been operating for over 29 years, where we're teaching the masses the more you know, the less you legally and ethically owe in taxes. We believe that everyone should pay and must pay every dime that they owe in taxes and not a dime more. And the IRS actually agrees with us. So today I want to talk to the homeowners. Or maybe you're looking at purchasing a home in the very near future. Well, if that's you, you want to buckle down right now. You want to get rid of any distractions because I'm about to share with you some information that could save you hundreds of thousands of dollars. I'm about to pull back the veil of information that you couldn't learn in the traditional educational system at any level, not even at the top universities around the world. I'm going to share with you what your CPA didn't tell you. I'm going to share with you what the bank is forbidden to tell you, and I'm going to show you what the IRS doesn't teach the masses when it comes to mortgage interest. Are you guys ready? Well, before we get started, if you're watching this on YouTube, I want you to hit the like button, hit the subscribe button, and when that little bell pop up, you want to definitely click on that bell so you are notified anytime that I turn on this camera and I start talking, because I'm going to save you a lot of money. And you want to make sure that, again, you share this information. Sharing is caring. Okay, let me get down to business. And for the folks that are actual homeowners right now, I want to make a statement, and it's not going to be good. And that is, your home is not an asset. Let me say it again. Your home is not an asset. The definition between a liability and an asset is a liability takes money out of your pocket and an asset puts money in your pocket. Okay, now I can hear someone saying right now, Mark, what are you talking about? I purchased my home for $500,000 5 or 10 years ago, and that house today is worth $700,000. So my house has actually increased by $200,000. And I agree with you. You know, the market is booming. But here's the truth. That $200,000 doesn't belong to you. It belongs to the bank. In order for you to be able to tap into any of the equity in your home, you must go to your bank and re-qualify the same way you did when you purchased your home. And in most cases, your mortgage payment will increase, therefore taking more money out of your pocket. That is called a loan. Okay, guys, so look, let me give you the good news. I'm about to share some information with you that will save you hundreds of thousands of dollars if you apply this information. Are you ready for that? Let's get started. Okay, so before I jump into the information that I know can change your life. Now, this may not be for you. It's not for everybody. I just think it's for 99% of homeowners, okay? I'm going to give you some bad news. I know you're saying, Mark, okay, here you go with some more bad news. First, you told me my house is not an asset, it's a liability. Now, what are you going to tell me? Well, unfortunately, your tax preparer and our CPA is not telling you the truth about your mortgage interest. 90% or higher homeowners gets zero tax deduction for their mortgage interest and property taxes. Guys, I'm telling you, look, you're going to be running around your house saying, thank God that I found that gentleman's video. And so look, I always say documentation beats conversation, so let's go ahead and clear up some myths. So I'd already went over to Google and typed in, is mortgage interest tax deductible? And so here's what it says. It says that taxpayers can deduct the interest paid on their first and second mortgages up to $1 million. You say, okay, well that fits my criteria because my house is only $500,000. Well, before you get too excited, I want to show you the documentation. You know, there's a saying that says everybody is entitled to their own opinion, but not everyone is entitled to their own fact. There's a reason why the school system does not teach financial education. And so what I'm giving you right now is financial education, not financial advice. And so to prove that to you, what I'm going to do right now, guys, is I'm going to jump over to a amortization calculator, and I'm going to actually share my true story first. So in 2008, my wife and I purchased a home for $408,000, okay? That was the sticker price. Our interest rate at that time was 4.875%, and it was a 30-year mortgage, all right? So guys, I consider myself to be very intelligent, and so what I'm going to do is I'm going to hit the calculator, and let's take a look at the results. And so here are the facts, okay? I often tell people when you buy a house, you're also buying the bank one. In other words, the bank has a 2-for-1 sale. You say, well, what is that? I told this to a guy, boy, and I tell you, we had a laugh. He said, well, what is a 2-for-1 sale? And I said, you buy one house, but you pay for two. So if you guys look at this illustration, I purchased that house for the principal balance of $408,000, yet after 30 years, the bank told me, and I signed this document, that my total interest and principal payments for the house will be $777,747. Look, I want to take this right here. I'm going to go over here and open up an Excel spreadsheet, and we're going to paste this in here because I want you guys to see this, okay? I don't want to do this on a calculator. So I purchased the house for $408,000. So I'm going to go ahead and put that right here. And what I'm going to do, guys, is simple math. I'm going to come over here, hit equal, come over here and say minus this number from this number. And here are the results, okay? This is the money that I paid to the bank. Now, in my situation, it was tax deductible. In your situation, it is non-tax deductible 90% of the time. I'm going to show you that, okay? But what I want you to do is I want you to take a moment and look at this. You purchased a house for $408,000 and you promised the bank to give them $369,747 over the asking price because you couldn't afford to put down the principal amount. I know what you're saying. You're saying, Mark, well, how else am I going to buy a home? Okay, I understand that you got to go down this rabbit hole, but I want to help you come out of this rabbit hole because there's no way that you can make me feel good about purchasing a house for $408,000 and giving the bank an extra $369,000, almost 100% the cost of the house itself. Guys, I got to pause for a minute. Just looking at this, I slapped myself so many times in the mirror and said, what were you thinking? Okay. And so now let me get to the point. So what I want to do is I'm going to scroll down here and let's assume that, this is 2008 when I purchased this home, and let's go for an entire year. So this is starting from September 2021. So we're going to go to September 2022. And I'm going to go ahead and highlight all of this, and I'm going to copy it, and we're going to go over here again to an Excel spreadsheet. In fact, let me open up another one, and we're going to paste this in here because what I want you guys to recognize is that not only are you buying the bank a house, but you're also paying the taxes on the money you're giving to the bank. And so you can see right here that this is the amount of mortgage interest that I paid. It doesn't help pay down the principal of that $408,000 sticker price. So what I want to do right now is I want to show you how for 99% of individual homeowners that your mortgage interest is non-tax deductible. And I want to show you that by way of going over to my favorite tax preparing software, TurboTax. And guys, we're going to go through this relatively quickly. So what I'm going to do is I'm going to go ahead and click on mortgage. This is a 1098 that you would receive from your mortgage company at the end of the year, highlighting how much interest that you have paid. Now again, we're going to use the interest that I paid on the home that I acquired for $408,000. And so we're just going to say that the mortgage company is the bank of the rich, because in this illustration, you're going to learn that there's no one getting rich other than the bank. And so here's what I want you to do. I want you to look at the numbers at the top, the amount of federal taxes owed currently right now, $11,724, and the amount of state taxes owed, $5,243. And so what I'm going to do is I'm going to go ahead and populate this for the mortgage interest. And remember, that was $21,408, okay? And we're going to go ahead and say the outstanding principal is $350,000. And we're going to say that this couple actually pays $2,000 a year in property taxes. Again, very important that you watch the two numbers at the top, because what you're going to realize is that as I hit continue, this couple is going to get zero tax deduction for the federal, and they're going to get pennies for the state. Okay, here we go. Wow. Did you guys see that? The federal taxes did not go down, and the state went down by a few pennies. So what that literally means is that you gave $21,408 in interest to the bank, yet because you could not deduct it on your taxes, you had to pay the taxes on that money. I'm going to let that sink in for a moment. And so what I want to do is, to be transparent, I want to show you that there's one tax code in America, but there's two sides. And so I'm going to back out those numbers, and you're going to watch the state come back up to where we originally started. And so now what I'm going to do is I'm going to take that same exact dollar amount, and I'm going to add that over here on what I call the right side of the tax code, the business side, and I'm going to apply the same $21,408,000, and I'm going to go ahead and put that under advertisement just for this example. Now, this is not to illustrate to you that you can claim advertisement if you don't operate a business, but I want to ask you a question as I populate the numbers here. If you as a homeowner could not get a tax deduction for the mortgage interest that you gave to the bank, in which you're now responsible for the taxes on that $21,408,000 a year, how is it that I can come over here as I hit continue? I want you to watch the two numbers at the top, the federal and the state. I'm going to take the same exact mortgage interest that you could not deduct, and I'm going to hit continue. Wow. Did you guys see what happened? Same exact number, money used in a separate or different category. One person was incentivized for the money, and the other person was penalized for the money. And so I went on and I removed that. What's the moral of this story? If your mortgage interest is not tax deductible, which means that you're paying the income taxes on your mortgage interest, and your mortgage interest does not help you pay down the principal debt of the house, how much longer are you going to continue to hand over hundreds of thousands of dollars to the bank, pay the taxes on that money, when you just found out that there's a better way? But let me get back to sharing with you how you can save hundreds of thousands of dollars on your mortgage if you simply apply this amazing information. Now I want to introduce you to a strategy that would have changed my life in 2008 had I known about this information. So if you're learning it for the first time, you're in the right place at the right time, and it comes by way of a company called SWYCH. I like to say, switch your mind, switch your money from the bank pocket into your pocket, and start to create financial generational wealth for you and your family. And guys, we're not talking about earning income in some sort of compensation plan. Let me show you the numbers, because people often lie, but numbers don't. And so the mortgage length was 360 months or 30 years, right? The principal balance was $408,000. Okay, let's go back and take a look at what the monthly payment was. You guys can see that right here, $2,160. So we're going to use that one, $2,160. That's just principal and interest. My income was $6,000. Actually, my income was $7,000 at that time. And my monthly expenses were somewhere around $3,000. Now remember the interest rate here. The interest rate again was 4.875. We rounded up to 4.88. I'm going to show you something, okay? Now this is not to say that this is what your interest rate would be, but I'm going to go from a 4% to a 6% interest rate on the same principal amount with the same monthly payment, and I'm going to hit calculate. And so let me open up this report and let's see what the results are. It says by implementing the HELOC strategy will allow you to pay off your current mortgage balance of $408,000 in just 144 months. Let me bring up the calculator, okay, because I want you guys to see this. 144 months divided by 12 months means I could have paid off the house in 12 years, not 30. Okay, let's continue. Opposed to 360 months. You will also save approximately of $208,893 in interest payments. But guys, this is the part right here that blew my mind. This does not require any increase to your $7,000 monthly income and assumes your monthly expense will remain at $3,000. Let me ask you a question. Knowing what you currently know about mortgage interest, knowing that you are buying yourself a home and buying the bank a home, knowing that you are paying the taxes on the mortgage interest, and now learning that there is a possibility, a very real possibility, that you can not only reduce the amount of time that you'll be paying a mortgage, in my case right here, 12 years, but you can save yourself hundreds of thousands of dollars, and you don't have to increase your income, and you don't have to make an extra payment. You don't change anything about what you're currently doing right now. Can you guys see why the bank will never make this your first option when getting a loan and or refinancing your home? And so I want to ask you a question. I'm going to hide the report. If there was a way that you could learn how to earn an additional $1,000 a month, bringing that $7,000 a month income to $8,000, this is hypothetical, okay? We're going to calculate that, and let's just see what the changes are. So now you can see that now we're going to be able to pay off the home in 106 months. Let me bring up the calculator. Clear this out. 106 months divided by 12 months. Ladies and gentlemen, that's 9 years. I know what you guys are thinking. This can't be true. Why didn't they tell me this? How do you do this? Well, guys, I'm going to share with you a link that you can go and actually run your own numbers for absolutely free. You're going to be able to download an ebook that's going to give you an enormous amount of information. Now, here's where I want to stop, because see, there's some people right now that are thinking to themselves, I wonder how much this is going to cost me. Well, here's the real question. How much is it costing you right now not to know it? Now, here's the other person that's sitting way in the back of the room. He says, well, Mark, I just refinanced and I've got a lower interest rate. In fact, I've got a 2.75% interest rate on my home. And so I want to ask you a question. How much longer do you want to continue to get a house for you while you're getting a house for the bank? And the bank never even sends you a Christmas card. So let's take a look at this. So we're going to take those numbers based on that 2.75%, and we're going to minus this number from this number, and I'm going to hit enter and ask you, how do you feel about paying the bank $200,000 in mortgage interest on a $400,000 house? Guys, let's wake up. 50% of the purchasing price of the house? Wow. I think you guys are starting to get the point. Here's something I know you missed. Did you guys remember that I actually used a higher interest rate than the 4.875? Well, what would happen if you were able to get this at a 4% interest rate? Well, let's calculate it and let's view the report. Okay, so here are the new results. By implementing the HELOC strategy, will allow you to pay off your current mortgage balance of $408,000 in just 96 months instead of 360. I got to bring up the calculator. 96 months. Let me clear this out. 96 months divided by 12 months is 8 years. Wow. What did we do? We went from using a 6% interest rate to a 5% interest rate. But here's what I really love. You're going to save $299,226 in interest payments that you were paying taxes on to hand over the $299,226 to the bank. Man, somebody dropped the mic. Okay, so as I get ready to wrap this up, I want to warn you, for those of you that are going to go to Google, and maybe some of you are going to go to YouTube, and you're probably already on YouTube, and you're going to try to research HELOC, and you're going to find that there's a lot of videos about HELOC. But please understand that there's a lot of different HELOC loans out there. You know, the primary ones are typically a home equity line of credit that you take out, and that's a second on your home loan. This HELOC is in the first position, and it consumes your entire mortgage. And so you don't have two payments. And what I can tell you is that SWYCH has something that's very important that I haven't been able to find with any other company that is offering to share this strategy that has been hidden from the masses. And that is, SWYCH is going to assign you a concierge that is going to walk you through the process to make sure that you don't make the mistakes that maybe millions of other people have made. That is priceless. How many times have you went out and purchased a car just to realize 3 years later that you're flat upside down because you didn't know the right questions to ask? They're going to provide you a list of banks that they've already done the work that offers the type of loans that we're talking about, so you don't have to do the work. They're going to offer you a list of questions that, unless you are inside of the financial institutions behind the walls, inside of the meeting rooms, you're not even going to know what to ask. There are many HELOC loans out there that are in the first position, but there is one company that is going to be able to give you the blueprint to assuring that you don't make a bad decision. And that's what separates this company. And so the information in the ebook is free. The decision is totally up to you. Yes, there is a cost to this information, just like we go to college to get a degree in hopes to get a good paying job, just to find out that they want to pay you $16 or $17 an hour until you have a 20-year record of working in the field in which you went to school for. In fact, most people that get a degree never even work in those fields. So of course there's a cost. It's costing you not to know the information. And so when this came across my desk and I did my due diligence, I said, I have got to share this with the world. The same way that I share with the world, the masses, about the hidden secret about our tax code and why the wealthy pays little to no taxes and the middle class is paying all of the taxes, is the same way that I have an obligation to the people to go out and share this information, because it is costing the masses hundreds of thousands of dollars that should be inside of their children's educational fund, that should be inside of a trust earning interest, so when their child reaches the age of 18, they don't have to start at the starting line in life financially. They don't have to go out and get in debt to buy a house. They get a head start. And so I'm passionate about this information, and I've done all my due diligence, and I can tell you that what SWYCH is offering is priceless. And so guys, I'm going to put a link down at the bottom of this video and inside of the subject. You can simply go to that link, populate a little bit of information, and look, make sure you populate the right information because you're going to want to get some questions answered. And I'm going to make sure that you get your questions answered before you make any decision. And for those of you that want to move yourself from the wrong side of the tax code to the right side of the tax code, you want to definitely visit our website. And I've got something special that most people that are sharing this opportunity can't even offer. I have discovered a way for you to be able to get a 20 to 30% tax deduction on this product. I can't wait to celebrate with you your mortgage interest freedom date, where your house that's a liability becomes an asset to you and your family so you can pass that on for generations to come. Guys, my name is Mark Pyers, home-based business tax coach and wealth coach. It has been a pleasure to share this information. I can't imagine the lives that are going to simply be changed because I decided to share this information, but you decided to click on it and learn it. Now it's up to you to click on the link below. Go to that site, populate the information, get the facts, and then share this information with everyone you know because people need what we have. And with that being said, guys, we won't see you at the top. We'll see you on the other side of wealth because that is where freedom is.